You wouldn't buy a car without having somewhere to park it, right? And yet, if you buy leasehold property, that is sort of what you're going to be doing. I'll be back to explain in 6 seconds. Welcome back to the channel and thanks for being here. There's almost as many ways to own real estate as there is to actually acquire real estate. And what you don't know really could end up costing you, and sometimes costing you big. Today we're going to discuss two types of ownership, freehold and leasehold. What's the primary difference between freehold and leasehold titles? With freehold property, you own the land and whatever comes on it. Leasehold, you only own what's on it. As mentioned at the beginning, think of it like buying a car without anywhere to park. You own the car, you can do almost anything you'd like with it, but you still need somewhere to park it. And parking, as we all know, is rarely free, so you'll need to pay for it as needed. Looking at the roots, while free is anything but, lease implies a form of rental, and that is exactly correct. If you plan on buying leasehold property, it would be ill-advised to do so without knowing the terms of the lease ahead of time. These terms can vary widely and is one of the things that can end up costing you in the long run. In Vancouver, a leasehold property would commonly start with a 99-year lease. The closer the lease comes to expiring, the less likely mortgage brokers are to lend on that property. Or if they do, they require a higher than normal down payment. For example, I recently looked at a 50-year-old leasehold property with approximately 45 years left on its lease, around the $500,000 price range. To buy it would have required a 50% down payment. This means instead of a first-time buyer putting a 5% or $25,000 down payment, they would actually need to put down $250,000. And why is that? Because banks are risk averse and buying leasehold property is risky business. These lending requirements make it harder for people to acquire leasehold property and therefore shrinks the pool of prospective buyers as time goes on. Just like paying for parking where you can pay for the hour, day, or even month, there are multiple ways to pay for the land underneath a leasehold home. Sometimes they are prepaid, meaning the developer has paid the lease to the landowner ahead of time. Non-prepaid means you'll have to make regular payments. Often they're part of your property taxes or sometimes with your monthly dues in the case of a strata or condo situation. Having a prepaid versus a non-prepaid lease will often be reflected in the price tag of the property when you purchase it. All things being equal, the non-prepaid lease would be valued lower as you would need to make additional monthly payments to the landowner. So what does this all mean in terms of long-term value? If you don't already know, the thing that holds the value of real estate the most is the land. Buildings age and sure, they can be renovated or improved, but in the long run, the most valuable asset is the dirt your dog pees on. If you chuckled even a little at that joke, go ahead and hit the like button for me. And what happens when the lease expires on the land? Well, therein lies the million-dollar question, and the answer is, it really depends. The landowner is not obligated to renew the lease, and if they do, they are unlikely to renew the lease at the same value. This could mean a significant increase to lease payments, or worse, if they don't renew the lease, it could mean you'll need to move. You may be able to move a house, though you'd need to have another property to move it to. However, it is a much different ballgame when it is an apartment building sitting on the leased land. You might ask then, why on earth would anyone ever buy leasehold property? And to that I say, it's often filling a need. Perhaps a single parent of 3 needs a townhome for their family but can't afford the freehold one down the street. A leasehold might make the monthly payments more affordable at a time when they're living paycheck to paycheck. Or maybe a retired couple that always dreamed of retiring in the big city but can't afford to buy a place outright, acquires a leasehold apartment with more time left on the lease than they likely have on this planet. And sometimes, just sometimes, it's because they didn't watch this video first. Without knowing specifics, my starting advice is to always acquire the land underneath you if at all possible. Unless you are the absolute most disciplined investor generating more gains from the money saved each month, it is likely that your financial future will look a lot more golden. And if you're wondering about something I haven't covered, feel free to ask any questions in the comments section below. That's it for me for the day. If you learned something and are looking to buy real estate soon, check out these 2 videos to help with some of the terminology and tax questions you might have. Thanks for watching and don't forget to subscribe. Have yourself a great day.